How have you been? When was the last time we spoke? How much was the Bitcoin price when we spoke? And
Was it
halving is
January?
tomorrow.
Yeah, I know. Very exciting. So are we recording now as in this is what's going to go out, or is this just a little chit chat before?
I mean, we can just jump straight into it for the actual thing.
Works for me. So last time we spoke, January, was it? I can't remember exactly. Maybe February. I know price was a lot lower than
February.
it is today. Was price around $50,000, $40,000? So
Do you
yeah.
want to share?
Oh yeah. Yeah, I can share screen. Let's have a go. Great. Can you see that?
Yes. So the last time we spoke was February. Um,
February.
Around that time. Yeah, it was around that time.
Yeah, so I think price was in the 40,000, approaching $50,000 region. And since then, we've made a new all-time high above 70,000. We've currently had a bit of a retracement to the 60K support level. And yeah, halving is scheduled for 2 days from now-ish. Initially, we had planned to record this as a live stream as the halving was happening, but it kept getting pushed back. And I think it's at about 2 a.m. on Saturday now. So I think it was just easier for us to record now. But yeah, things are looking pretty good. I think Bitcoin is in a pretty comparable spot to previous cycles in terms of where we'd expect price action to be just prior to a halving. And I personally could see pretty similar price action after the halving to what we've seen in historical cycles as well. So overall, compared to when we spoke last time, Bitcoin looks great. Obviously, even higher prices would be appreciated. But I think just some chop and consolidation around here, maybe a slightly deeper retracement as we hit the halving, and then maybe probably a boring couple months through May and June, and then hopefully Q3, Q4 this year, we start setting new all-time highs and really rally higher.
Yeah, I think that makes sense. So maybe we look at on-chain, some on-chain data
Yeah, of course.
first,
So
and then maybe look into some chart patterns afterwards, because I have some cool stuff to comment on actually.
yeah, works for me. So I think the first one we need to look at is the stock to flow. Whether you are a believer in the stock to flow model or not, I think even if you don't believe in the potential price prediction in future cycles, I think we really have to acknowledge that the halving is a very bullish event for Bitcoin. Historically, it's always led to rapid price increases. And we can see usually it's not an immediate price increase. Usually we have a few weeks, if not a couple months, of price kind of going sideways, kind of waiting to fuel a leg higher. But yeah, I think this is one of the most bullish charts in Bitcoin, especially as we are only a day or so away from the next halving event. I think the rest of 2024 into 2025 looks great. And what the halving is actually going to do is decrease the miner rewards in block rewards by 50%. This is why it's called the halving event. So it's going to decrease from 6.25 to
Down to
3.125 BTC per block, which is about every 10 minutes. So really, this is quite a bullish event because not only is liquidity of the new supply of incoming BTC decreasing by 50%, but we kind of need price to double just for miners to retain their current profitability. If we look at something like the Puel multiple, what we can see here is after the halving events historically, which was around here and around here, this drops massively. Now, this is looking at the current miner earnings in USD denomination on the current day compared to a yearly average. And historically, this has been an amazing signal for timing tops and bottoms of markets. Basically, when miners are making lots of money compared to what they usually make, that's a good time to sell, and vice versa. When they're making a bit less than usual, it's probably a good time to buy. But this is actually
So
going to
wait,
drop.
when the Puel multiple hits the upper band, what does that mean?
So you can see here this value 3.46. That means on that day, miners were earning 3.46 more than they had been for the previous year. And it bottoms like down here, for example, at 0.31. That meant they were earning less than a third of what they had for the previous year. So when miners are earning lots and lots of money, that's obviously great. They're incredibly profitable, but usually they actually start taking some profit. They start realizing some of their gains when their earnings are considerably higher than normal. And the opposite is true for the downside. Once we see miners capitulating, once we see them refusing to sell because it kind of seems like a waste of selling, you know, you've been mining Bitcoin for a year and now your minings are substantially lower than what they usually are. Maybe you hold on, maybe we get less sell side pressure. And again, this is usually a pretty good time to accumulate BTC.
You know what's cool about this chart, which wasn't the case when we spoke last, that we're discussing whether the pool multiple will go back down or whether it would sort of break out of the resistance line, which you can draw from the first peak all the way down, the slanting one.
Looks like I had some drawings from last time, but yeah, it's looking something like that currently. And it is going to reset.
A bit lower.
Kind of like this. It's a pretty rough drawing, but yeah, we can see the peaks are decreasing. So we actually hit this peak just as Bitcoin hit a new all-time high. And there was a few other signs that the market was maybe getting a little overheated. So for this to decrease, well, it's going to half. That's obviously pretty bullish. It allows us to kind of reset, refuel the next leg higher. Miners suddenly maybe aren't going to be selling huge amounts because historically, I think a lot of miners just prior to the halving event, any Bitcoin holdings that they've had for the previous months or years, this is probably the most opportune moment for them to start taking profit because they know that in the next few months, the next year or so, if price doesn't double, then their profitability is going to remain 50% of what it was previously. So if I was a miner, if I had huge Bitcoin holdings, now probably wouldn't be a bad time to start scaling out of positions in the hopes that in the next few months price increases and suddenly, even though you're earning less and less BTC per block, your minings in USD denominations are actually kind of catching up because price has increased. So usually we do see this kind of buy the rumor, sell the news event with the halving. Obviously, it's a very bullish narrative, but historically, it's not actually seen the most bullish price action around the halving event. Usually, we actually do see a little bit of a pullback or a decrease or at least stagnant price action during this time.
Yeah. And also after the halving, you get those miners which are not really efficient dropping off the network. Difficulty adjustment sets in, kicks in, and then you get new miners coming back in or switching the rigs back on.
Exactly. Yeah. So it's a pretty volatile time for price action usually. If we go to something like you said, if we just go to the charts and the miner revenue, fees versus rewards, what we can also see is this rewards, which is the block rewards, this blue shaded area, is going to continue to decrease. So miners that are relying very heavily on this are obviously going to suffer. So this is where we get miners dropping out. We get new miners with new capital coming into the market. And we can see this yellow area, which is the miner revenue in fees, is actually pretty high at the minute. This has been increasing for the past few weeks and months as more people are starting to utilize the Bitcoin network. So really, it's pretty standard to see that, you know, once this huge blue shaded area decreases 50%, that we are going to get a lot of miners capitulating. But it usually doesn't take too long before we kind of see new miners coming in, buying up their old miners, setting up new facilities, and kind of, again, resecuring the Bitcoin network. We usually don't see a huge drawn out drop in miner difficulty. If we just go to this chart quickly here, we can see, I mean, prices increased and hash rates increased so massively, it's hard to really see on the chart. But the previous halving event, which was around here in May 2020, we could see we had a couple consecutive miner difficulty decreases, which meant the hash rate was decreasing, blocks were taking a longer time to mine. But this didn't last long before it obviously started to climb higher and higher as more miners came into the space.
Yeah, exactly. Cool. Interesting. How's the Pi cycle doing?
So we actually have a new version of the Pi cycle that just came out last week or so. I don't know if you've seen it yet. It's the Pi cycle top and bottom indicator. So this is like an oscillator. So we can still see the moving averages, but now we can see the actual percentage difference between them, which kind of gives almost a little clearer way to anticipate when these are going to cross and maybe when to start taking some profit.
So right now, how far away is it from one?
So it's at 0.6, which you could kind of interpret this as being 60% of the way through the bull cycle if this was to continue increasing at this rate. But realistically, the fact that we've had this pullback is probably a little bit of a bullish thing, because if you look at something like the 2016, 2017 cycle, we were also on this very rapid ascension in the pi cycle top and bottom indicator or pi cycle oscillator. But then we had this big ranging price action, which didn't necessarily mean price was stagnant. We still kind of ground up higher, but it allowed new capital to come into the market. It allowed new retail to come in. So the fact that this is kind of maybe slowing down and maybe we do get a very similar kind of choppy price action before moving higher is actually a pretty bullish thing, I think. I mean, it might look something like the 2019 kind of run up to 14K we had, where we have this big decrease afterwards. Hopefully that doesn't happen. We don't get the massive 60% drawdown. But either way, the longer we can spend not getting towards this kind of incredibly high value on this oscillator, the higher potential we have for a bigger bull cycle peak, I think. Basically, the longer we can pull and draw out this bull cycle, the higher the cycle peak's price is likely to be.
Yeah, I recently did a post on the pi cycle. It was at 46% from its the distance between them was 46%, and I found 46% every time it was 46%, and it's actually a really clean viewpoint that price should continue trending up.
Yeah, I mean, in the 2016, 2017, it was around 50%, so just slightly higher than that, where we kind of came down a little bit, chopped around, and then again, here we came a bit higher here in 2022, 2021, when we had the actual all-time high on the double peak cycle. So yeah, I think now is kind of a bit of a deciding point for Bitcoin and this bull cycle. I think if we don't get kind of a bit of a drawn out choppy consolidation or even a pullback in price now, when we start matching two all-time highs, then this cycle might look potentially like a double peak cycle, or maybe just a single peak cycle much earlier than anticipated. So something like here in 2013 into 2014, we ran up in price, we got the pi cycle cross, came back down, but then ran up even higher. So we had these two all-time highs in one cycle. So maybe something like we get something like this in 2024, come back and make a new all-time high, or maybe we just set this peak and then the bear cycle begins much earlier than we anticipated. But the longer we can prevent that happening, the longer we can stay in this region, I would say the better for Bitcoin.
Yes. Interesting. And what about the MVRV Z? How's that doing?
Again, a lot of metrics are kind of were pointing towards very similar things of Bitcoin maybe getting a little bit too overheated too quickly. But now we've had this pullback. It's actually pretty nice for price to have had this cool off period. So what I like to do on the MVRV Z is draw a box around here, which is usually where we kind of get this resistance. That line's way too thick, but you can kind of see where I'm drawing it, where Bitcoin's price usually has this mid-cycle peak. So we got it in 2019 into 2020. And in this cycle in 2016, 2017, we had a few of these big run-ups and decreases. The previous all-time high had this at a very similar level. And then even in earlier cycles too. So the fact that we kind of exceeded where we usually see this mid-bull cycle run-up and slight drawdown period was kind of getting me a little bit worried that we were going to have this big exponential run up and peak a lot earlier than many anticipated. But now this has kind of cooled off a little bit. I think it's actually very healthy for the space. Like a lot of metrics are looking at now, we're seeing this realized price continue to increase as people are continuing to accumulate at higher prices. But realistically, people aren't going to accumulate BTC if we're just rapidly ascending to new all-time highs constantly. People want to get some value for money. And this is where I think something like the short-term holder realized price gives a really good indication of maybe where Bitcoin could bottom out. If we just look over the past few cycles, we can see this is the average accumulation price of new people coming into the market. And what we can see is throughout every single bull cycle, when these new market participants start reaching their break-even prices, so all throughout this cycle, this was basically the strongest moving average and the best area to accumulate BTC on this entire run-up. And even in the 2020, 2021.
Is that the 20 period moving average?
No. So this is, like I said, the accumulation price. It does look similar. It does look very much like a moving average. but this is the actual price that short-term holders or people that have been in the market for less than 155 days paid for their Bitcoin. So this isn't a moving average based on price action. This is similar to the MVRV Z-score. This is similar to the realized price, but specifically looking at new people coming into the market. So we can see at the minute, the average new market participant has paid $59,000 for their Bitcoin. And usually when they're at break even, this is a really good area to accumulate during a bull market.
Makes sense. Makes sense. It looks like 20-period moving average. It really does.
It does. It looks super similar. It looks exactly like an exponential moving average or something, but it really accurately kind of distinguishes if we're in a bull cycle when we're above it, a bear cycle beneath it. And then when we get super far beneath it, you could actually divide this and create a short-term holder MVRV Z-score, where you could say, if the short-term holders are at a 50% loss on average on their position, that's a good time to buy. And if they're making three times their money, this is at $59,000. If I just zoom in on the current cycle, we can see after we set the bottom, most were at a loss. We've actually bounced off this throughout this entire move from 15 to 70 plus thousand. We did have a slight consolidation period beneath it here, but it was pretty short-lived. And now we're actually coming down to this $59,000 level. But this is moving up every single day, because every single time a new market participant starts buying BTC, this starts increasing. So it probably only a few days away from reaching $60,000.
So there's like reason to believe we won't go below it.
I mean, never say never. This is Bitcoin, and 20, never, 30, 40%.
No, never say never. But if you look at it from November 2023, we've been above it.
Yeah, yeah. And
if you look at January 2023, from January 23 to September-ish 2023, we've been above it. So I don't know what happened in September, November. I can't remember, but that was the period I think we weren't sure if we were in a bull or a bear.
Yeah,
and there was this argument between bulls and bears, and they lost essentially, and now we're up. So I don't see. I think there's a good, there's an 80% chance we stay above it, which is cool, which is interesting.
Yeah, and I think the best example of this throughout an entire cycle was that 2016 into 2017, where if you would have just bought Bitcoin every time we touched this line, every time short-term holders were at break even, maybe they start capitulating. Maybe that's why we get a rebound, a little bit of a short squeeze, who knows? But it was just a perfect accumulation signal all the way up, perfect risk reward. And of course, if you see price at $3,000 dip to below $2,000 and you're thinking, wow, price has decreased about over 30%, maybe that was the peak. Maybe we're not going to reach a significantly higher all-time high. But at this point was when there was mass fear in the market. People were break even. People thought I should have sold higher. Maybe I should have bought lower. And these are the most opportune moments when people are at their most fearful, when sentiment is incredibly bearish.
It does go below it a bit, sometimes. It does dip below it.
It does dip temporarily below it. So I think there's a few other points looking towards maybe 58K being decent support if we are to dip not significantly further below 60K support. But really, I don't think we'd go much below that. If we did, maybe towards that 50K level, again, I think it'd be pretty temporary. If I'm all right, just to jump over to TradingView quickly, we've actually rebounded to about 63K. And what I've done here is actually just line up the price action of Bitcoin in this cycle from a month before the halving. We're about a day or two away from the halving to a year after that. So we can actually see how it compares to previous cycles. So I'll just zoom way out. I'm on the weekly chart here. And what we can see, these vertical lines indicate when the halvings occurred. And what I've done is this 2012 halving event, I've colored green, this 2016 orange, and the most recent one red. So we can actually see if we zoom in here, again, I started these a month before the halving event. It's not like we see price massively increase immediately. Usually we have, a few months, a few weeks of price kind of going sideways.
Can I stop you a second, Matt?
Yep.
Can I stop you a second? Can you explain how you drew these fractals? These are fractals, correct?
Yeah, I just used the bars pattern. So I just grabbed from a month before.
No, but like from which part? You took the month before the halving for every halving cycle, and you plotted it out like that.
Yeah, and then just took to a year after. So something like that. But
cool.
We can see in each of these price probably isn't as bullish as we'd imagine for the reasons we discussed. Maybe it's minor selling, maybe it's a buy the rumor, sell the news event. But worst case, lining up to all of the historic examples, it also gives about a 58 to 60K worst case scenario. Now we are seeing diminishing returns and maybe a bit more downside possibility, and there's institutional selling. Who knows what's going on? There's always a narrative. But realistically, if we were to dip to 50K, it'd be quite a bit different to what we've seen in previous cycles.
So do you think 50K would be hit, or do you think 50K is like the 12K of a few months ago?
I never like to be more than 51% sure with my predictions. I like to always assume that there's a good chance that I'm wrong, but I've been pretty outspoken over the past few weeks that I think 60K was going to hold. Of course, I can be proven wrong, but for me, it's a win-win scenario. Either Bitcoin goes to higher prices or I can buy more Bitcoin at lower prices.
All right, I'll rephrase to make it easier. Let's say you have $1,000 and you don't own any Bitcoin. Are you buying now, or are you buying, let's say, 60% now and the other 40% at 50K, or the other 40% at 20K? Like, what's your plan for that?
If I was a new market participant and I had $1,000, I probably wouldn't be trying to time the market as well. I'd appreciate that we're currently in a period where there's a lot of fear in the market. If we go to the funding rates chart, which I've got loaded up here, we can actually see that funding rates are negative, and they're actually the lowest they've been since back here in March 2023. So 13 months is the period of time before we had a funding rates more negative. So the overwhelming majority of market participants, I mean, it's changed a little bit in the past couple of days, but a vast majority are shorting the market, anticipating lower prices. Yeah, and the funding rates is like the perfect counter trade indicator. Once everyone's short, once everyone's bearish, now is the time to act as a contrarian and accumulate and be bullish. So if I was to have $1,000 as a new market participant, I would be putting 5% of it in every day for the next 20 days. I'd keep it really simple, and it takes the emotion out of it. You don't have to consider timing the market. I don't necessarily think blind dollar cost averaging is the best strategy, but I do think dollar cost averaging in when the market is giving you a good opportunity, when we're near the break-even price of short-term holders, when the funding rates are negative, when we're currently sat at support according to something like the golden ratio multiplier. I think all of these kind of give some confluence and combine to really say Bitcoin has a decent chance of bouncing higher. And if we are to dip to 50K, it doesn't matter because you've given yourself that opportunity to continue dollar cost averaging at lower prices. And ultimately, I think if you look at the risk to reward, Bitcoin almost certainly isn't going to drop to 30, 20K or anything. We're pretty reassuringly in a bull cycle. So a few percent missed here and there is, you know, nothing when a Bitcoin's price is in the $100,000 region.
True. Doubling your money almost.
Easy money. Easy in theory.
It's good about the funding rate. Obviously, this 10%, 12% fall in price, which wasn't too much of a shock, to be honest. Although it scared quite a few people, was needed. It was definitely needed, and it cleaned out a lot of gambling. I think leverage gambling.
Yeah. So a few parts to that is, I think anytime we have a bit of a retracement to kind of shake out over leveraged market participants, whenever you see meme coins going, 10, 20, 30x, and everyone's saying, why are you holding Bitcoin? Why don't you buy this random meme coin that was made 3 days ago? Anytime the market gets into kind of those conditions, it's usually not a bad place to consider locking in some profit, because realistically, when everyone thinks making money is incredibly easy, that's usually the moment when the market decides to punish the most people involved. And if we go to something like the on-chain charts we have here, one I was bringing up is that it's not there. I'm in the wrong area. Hang on. There we go. On-chain indicators, not on-chain movement. The value days destroyed. This had got incredibly overheated, which not only indicated that a lot of new market participants were maybe making a little bit too much money, were maybe gambling away, over leveraged, but we could also see, according to this, that a lot of older market participants, a lot of people who'd been in the market for an extended period of time that were actually holding large amounts of BTC, were beginning to take some profit as well. So what this is doing, the value days destroyed.
So wait, this one was showing as a...
Yeah, I mean, we were seeing value days destroyed values at pretty much the same level we usually see at market peaks. And there is a little bit of a difference in this metric because usually we don't see an exact peak as this tops out. So in 2017 here, this topped out a few months before the actual all-time high. So we see it climb, and then actually the actual all-time high is usually a bit lower. So same here in 2021, this peaked out, market cooled off a little bit, and then the actual all-time high was at a bit of a lower value. So what this is doing is looking at the coin days destroyed. So that is the amount of BTC that's been held in a wallet and the length of time. So really simple, if I had one BTC and I held it for 10 days and then sent it to another wallet, probably to sell, I would add 10 coin days destroyed. And if I held it for 100 days, I'd add 100 coin days destroyed. So what this is doing is it's weighting the BTC network activity to those with a huge amount of BTC that have been holding it for a long period of time. Usually we can associate people that have huge amounts of BTC to have a little bit of influence on the market. And those that have been in the market for a long time are probably quite experienced in timing their selling. So when we see this run up incredibly high, it usually indicates that more experienced market participants are seeing market conditions as a little overheated and are starting to maybe shift their BTC to exchanges, lock in a little bit of profit. But it doesn't necessarily mean the all-time high is here, because that actually doesn't usually come from old market participants selling, but it comes from new market participants, retail traders coming in and buying it way too high prices.
This is cool. An oscillator would be nice on this.
Yeah, I'm sure we could do something like that. But yeah, I mean, this is just a super simple way to see green periods, markets probably at a decent place to accumulate, and red periods, it's probably a little overheated. So it's just a really nice, easy visual tool that has, pretty amazing accuracy. Like I said, not necessarily immediately calling the market peak, but whenever these get red, usually at least a pullback is on the cards.
Just think. And we're there at the moment.
We've actually come back a little bit. If I just zoom in,
We've gone through it actually.
Yeah, so
proper
we
thinking
actually
has been done.
Yeah, we came up above $70,000, pretty much exactly where the all-time high was, and we've cooled off a lot now, which again is another very healthy sign that older market participants maybe don't see this as the best time to be selling their BTC. Maybe they've seen we've retraced 20% and now saying, I've already locked in a little bit of profit. I'm going to wait for higher prices, a new all-time high, before I start selling more.
Yeah. Interesting.
Cool. So any other halving related on-chain macro things you'd like to see, or should we move on to the charts and look a little bit more at a technical analysis focused?
Just one question to you, and then I can move on and talk about sort of how I've been seeing the charts visually for the last few years. On-chain data at the moment, is it suggesting that we're going to go past 200K, 100K anytime soon? Is it looking overheated? Is it looking fine? How is it looking sort of overall? What's it saying overall?
I think if you look at short term, we definitely were overheated, and on-chain was suggesting a pullback was due, and we now probably have seen that pullback, at least a big portion of it. Maybe we go lower, I don't know. But short term, things weren't looking great. They definitely now look a lot healthier. But if you're looking medium term throughout just this bull cycle, things look very healthy. We have so much more upside potential on pretty much every metric. We can see we're not very overheated. And on a longer term, if we're looking a couple of years into the future, I think the stock to flow is really all you need to look at to say we're in an amazing place. Now, I'm not necessarily saying that price is going to exceed $400,000, $500,000 like the stock to flow, the original stock to flow model is suggesting. That's, I would say, a bit of a reach, but ultimately the chances of significantly higher prices, I would say, is quite high in the next year or so. If we look at something like the Bitcoin Cycle Master, which is a combination of multiple on-chain metrics to give this fair value valuation, and then undervalued, cycle lows, and then an overvalued. Historically, this has been perfect at calling the exact bottom and pretty much the exact top. Sometimes we exceed this upper overvalued cycle peak value, and sometimes we dip slightly below the lower one. But if we just zoom into the past couple cycles here, looking at kind of a combination of all on-chain metrics, we can see that it's currently saying a fair value price of $50,000. That's why I think if we were to break below 58 to 60K, that would be the next logical point to really aggressively accumulate BTC. But this is actually calling for a Bitcoin price of $137,000 currently as a potential cycle peak. But this is actually, again, always increasing. If we look at the previous cycle to when the halving occurred, it was saying a price of $30,000 was overvalued, but we peaked at over $60,000. So there's a chance that this value could increase 50, 100, 200% by the time we actually reach that.
Yeah. This is a good place for me to jump in actually and start showing the charts, because the 60K is where I sort of wanted to start showing a bit of the charting patterns that I had seen. 60K from 2020, 2021.
Yeah, so let's do it. I've stopped sharing, so it should be all yours now.
So if I want to share desktop. Share. Can you see my screen?
I can see. You have a very messy desktop.
I do, but that's because I've been writing articles, and when I take screenshots, they save to desktop, and then I transfer them over to Canva, and in the meantime, those are sitting over there.
It's fine, no judgment here.
All right, so cool. I just want to start off by saying that I'm a very visual trader, so I find that chart patterns they work and they can ease the anxiety of holding, because when a downtrend happens, you sort of can preempt it, and the opposite moving upwards. So back in, I think this was 2022, something like that. We had topped in 2021-ish, and we were creating a lot of ascending wedges. Now, there's this article I had written, which is basically on CCN.com, which is a media outlet producing news and educational content, mostly skewed towards Bitcoin. And in this article, I basically just wrote some chart patterns, which for me have really worked. And they're not like secret, everyone knows about them, but they should be looked at even more closely because they do work. One of them is the ascending triangle, which we saw this in 2019, where basically we bottomed out. And an ascending triangle, a triangle in general, is where you have a resistance line and a support line. And normally you get 2 touches at the support and at least 3 at the resistance. So that's sort of a caveat. In 2018, we had the opposite, which is a descending triangle, where you had multiple touches on, in this case, the resistance line, and you had 1, 2, 3 touches on the support before the support was broken down. And normally what you can do, which is why I like it, is when you have this panic, like, oh no, we've gone below 6,000, you can time it. So you can just take the distance from the top to the bottom, because we're moving down, which is marked as 47%. And you can say, okay, cool. So let's say I have that 1,000 euros. I'm not going to DCA in. I'm just going to wait for the 47% and buy the bottom. And this is the tactic I use when I look to position trade. Now, the reason why I wanted to just jump in on the 2021 high was because it was a really obvious ascending wedge. Now, ascending wedge is basically when you have like a concave moving towards an apex, and then you have a breakdown of that ascending wedge. So you have higher highs, again, 3 touches at the resistance line, but these higher highs are getting slower and slower. And you have higher lows too, and also you develop this support line. So basically what I had seen in 2021 was that this ascending wedge, and you have this ascending wedge actually was really apparent everywhere. So you had one over here, you had one over here, and just like the opposite of an ascending wedge, you have a descending wedge. You had one here, you had one here, and basically what as I was at this point where the market was super depressed, we had a bear market that lasted a year, which, you know, went down from 60 something thousand to 30 something thousand with a minimal bounce, and then it capitulated with FTX and all that stuff. It was depressing, right?
Yep.
However, what we were forming was a giant falling wedge. So when we came down to the 15, 16K, which here is 16K. So this is a video I never actually posted, but I said I'm gonna share it today, like, because I was very happy with this call I made for myself. Basically, all I was saying was you could possibly have now a breakout to 30K because you are in a descending wedge, which is a bullish thing, you know? So I was getting excited. I said, okay, cool. So if our first target is 30K, and you're obviously praying to God here that it actually, this chart pattern is going to work out, you know, then sort of what likely might happen is you get to 30K, you have a correction phase down to around, in this case, 24K. And then, you know, you start, because you're now in a bull trend, it's reset, and you start making your way back up. And I had thought that the breakout would happen anytime between end of December and the first week of January, which more or less, that's basically, if you look at it, what happened, because on the 9th of January, we sort of started to make our ascent. And what happened was we went up to 22K, we pulled back down to around 19K, and then we started pushing upwards, you know, and that was the start. So what I'm trying to hint at is that chart patterns, they do work. So I try and always visualize what is the behavior of the market, because if you look at it as a picture, here what you're looking at is market behavior of 2+ years. You know, you're collectively looking at what people have thought for 2+ years, which is not something that should be not considered, you know. So this article goes into some more common chart patterns. So for example, over here you had the head and shoulders pattern, which ultimately could have told you that there's downside. And my point is, sometimes you don't need to act on these things because they may be wrong, but at least you can calm the anxiety as a holder and say, look, the chart is telling us it's going to go down, and it is going down. So there's nothing too wrong about that, you know, because essentially the trend is up. So it's a smaller chart pattern within a bigger chart pattern. So it's just training the patience a little bit. So yeah, so basically what I found was that there was this giant wedge pattern, descending wedge pattern, which is a bullish pattern. And when we were at this stage, I remember saying, shit, like, is this it? Are we going to go back down? And this is where we went below that September thing. Remember, we're looking at the on-chain chart, and it went below that moving average one, which I thought was the moving average. We went below it. And at this point, I was really not sure, you know, where the price is going. So I sort of carried out some more TA to try and find reasons to believe why I think the price is going to go up. And what did happen was we had a golden cross, which is basically one moving average, 200 above the 50. And what I wrote in this CCN article, so I write about this stuff on CCN. What I found was that whenever it goes above it, this is the monthly, pretty sure this is the daily, sorry, the 1 day. So whenever we go above it, we tend to stay above it for a long period of time, you know, because it takes quite some effort to get above it. And when we go below it, we tend to go down in price. So what I found was, okay, we're up. Over here, we just went above it. So technically, are we in this situation where it's going to break down like we did over here? Or are we in this situation where it's going to keep on going up? So what I did was I am like, as I said, I'm very visual reader. So there's this encyclopedia of chart patterns, and it's called the Encyclopedia of Chart Patterns by Bulkowski. I don't know who he is, but he's a very famous guy for sure in this chart patterns. And he has an encyclopedia of 1,200 pages, something like that. And on page 699, so I would just scroll, like what pattern does this look like? You know, like what pattern does this look like? Like from here to here, there must be a pattern that looks like this. So I would scroll and scroll and scroll. And on page 699, there was this 3 rising valleys chart pattern, which I was like, shit, this looks a lot like it. You know, you've come down, you've punched above it, little bit of a retrace, you've punched above it again, you've made a high over this high over here, a high over this high, and the high over the second high. But at the same time, you're also making higher lows. You know, you have this first low, this second low, and this third low. So if you look at a close-up of that, what I was telling myself at this situation was, okay, we're here at the moment. We just broke down. It's September. Everyone is panicking. Everyone is saying, no, we're going down to 20. Peter Schiff is saying we're going down to 16. Everyone else is saying I'm buying in at 12. But I was like, wait, like we just came out of a giant descending wedge, you know, like it's bullish. Like there's a lot of bullish vibes going on. And there is this chart pattern, which basically, as I read about it, is a very bullish chart pattern, because essentially you have what it's telling you is that buyers are coming in very strongly. Then buyers are selling, or people that don't believe that it's going to go up are selling. But those smart buyers realize that this is a good level to buy, because probably on-chain data saying it's good, you know, and it all meshes nicely. This is why I like chart patterns and on-chain data. You have violent increases in price. You have your second high compared to this one, you know, and then you have that retracement going back down. You have arguably a very small but visible descending wedge. So in the back of my mind, I know, okay, this is a bullish chart pattern. So technically, I shouldn't be selling here. I should be waiting to see what happens. And then you have this move where I just lost the page now, but I'll quickly find it, because this one, actually I have it. So I wrote an article about this, and it was how to trade the cryptocurrencies using 3 rising valleys chart pattern. But basically you have the valley formation, the higher lows. It goes into why you have buying pressure, the psychological side to it, where your anticipated breakout is. I looked at previous chart analysis, chart movement in price on episodes where we might have seen this kind of structure play out, and it did actually play out in. No, sorry, this is the current one where we were at the time I was writing this article, September. And it was difficult to confidently say that I think we're going up, but essentially this chart over here, which I just sort of lost it, but what happened here was, in this book, it says that you'll find a stage where you'll start printing a W. And at this point, we're here. And in the book, it stops here, okay? So I said, okay, cool. If the 3 rising valleys chart pattern has been printed, and now we're in this W formation, if we get above this level here, and I meant this level here because of this high over here, if we're above this level, then I'm almost certain we're going up, you know? So psychologically, I've gotten the giant down descending wedge pattern. I've got that has fueled my sort of bullishness, because it was correct, including the short-term movements downwards. You know, you expect them and they come, which is good. It's healthy. And then you have this W formation. So I said, okay, cool. Now, if this plays out, then I think we're going higher, and sort of I think we're solid in a bull market. You know, and I always make reference, by the way, to the look into Bitcoin. And before I just jump over to the next part, because this is all leading to a very interesting chart pattern, which I'm currently seeing. There have been instances in a bear market, though, where you have a not so pronounced, but you have it anyway. 3 rising valleys chart pattern, 3 higher lows, 3 higher highs, this W, but it breaks down. It breaks down, and it breaks down because at this point, the market decline had come because of Celsius, FTX, Fed. We're in a bear market, so it's going to break down. So I said, okay, that shit isn't happening at the moment. So technically, we should go up. And we actually did go up. So at this point, I was like, crazy that that either I'm super lucky or charting really does work. Also ingrained in this chart pattern, if you look at the monthly on the Heikin-Ashi charts, you have a massive downtrend of red candles. And now you have an uptrend of green candles, which is basically saying that these candles, Heikin-Ashi candles, are really useful because they filter out the noise from regular candles, so you just get the trend. I just want to know the trend. And over here, you basically had an amazing cup and handle, from bear to bull. You had a downtrend, an uptrend, you had a consolidation, and then literally 52%. To be conservative, I printed it over here, which took us to about 45-ish thousand. And sort of that's what happened. And we started making a move to 45-ish thousand, to 42, 45,000. And then at this point, I was like, okay, what happened in the past? And at this point, I like to look at the moving averages, because the moving averages in a bull market, they hold, and they really do hold, like if you look back. And this is the 20 period one on the weekly, I think, on the weekly. And basically what it was saying was that in 2016 to 2018, arguably this was the first touch, this was the second, but I wrote 1, 2, 3, 4 just to get whatever. That is difficult to accurately pinpoint, but these aren't. So this is the first one, this is the second one, this is the third one, this is the fourth touch. This is the fourth touch. And what sort of happened was I said, okay, man, like if we get a bounce from here, we should definitely be going up. Now, this is some hopium that will go to 100,000 because it's basically the fractal from this 4, but it could have also been this 3. And I knew that at the back of my mind, but that's fine because at least I know where the trend is going. That's all I really care about. Because if you know the trend is changing, that's where you really have to catch it. And then basically we were in a situation where we were at 40-something thousand. And I was like, okay, we're here. So we had got giant descending wedge, we had the 3 chart pattern, 3 rising valleys chart pattern, W formation, which broke out like I thought. And now we're here and everyone's going, no, I think we're going to come back down to this support line or whatever it was. And I was like, back to the encyclopedia. So I went to it, and thankfully on page 49, I saw this chart, and this chart like blew my mind. Basically, this is a chart which is on broadening wedges, okay? So a broadening wedge is when you have this sort of like horn or whatever formation, And what's cool about it was that in this 1 year, February 93, for this company, Vanity Corp, I saw the entire chart of Bitcoin. Why? Because you have a bottom, which ultimately is the bottom I was showing in the very, very beginning, which is this one, which is the bottom of 2019. So that's how far back this chart pattern goes, just so solid in my eyes, at least. You have the bottom. You have a bottom. You have a rise up and a descending, broadening formation starting to form. You have a rise up and a descending formation, broad formation start to form. You have a breakout of that broadening wedge, which is normally what happens. And then you have 1, 2 tops. You have a breakout of the broadening wedge, and then you have 1, 2-ish, 3 tops. And then you have a massive bear market down to like lower than the previous previous highs of the broadening formation. So, oops. 1 second. What happened? Yeah. So then we had the low, which I thought this looked this partial rise. So you have these two tops and a partial rise. These two tops and the partial rise. You have a downtrend in price. You have a downtrend in price. You have a breakdown of that downtrend. So now it's resistance, and you have the price tries to get above it and it doesn't get above it 1-2 times. 1-2 times, arguably. And then you have a final bottom. And then you have a final bottom. And at this point, I was like, in this one chart, I see almost 7 years of exact same formation, which to me was unbelievable. So then I was like, it has to go up because we were here at this point. And I was like, okay, so if in my eyes, this is moving exactly like this chart on this encyclopedia, then my best guess is to not go against it. And it's to basically say that chances are now, even with all the with ETFs and with the Fed cutting rates, and obviously you're not only following blindly what the chart is saying, you're backing it up with the fundamentals that fuel it. You know what I mean? And then push the resistance, but that resistance, look what happens. Come back down to that 49-ish, 50K range, we go up. So I said, okay, chances are we'll go up to all-time high or just touch it. I didn't think we'd go to an all-time high. I thought we'd find resistance at the all-time high. And then we'd come back below it, back to the level where I was plotting it over here, which is around, and this is the chart, by the way, and he explains it, which is around, in my opinion, 50K. This is why I found your 59K quite interesting, because it doesn't necessarily mean it's going to go to 50K. Because if you actually take the percentage downfall from this is 39 to roughly 36. That's not more than like 10-15%, if you think about it. So arguably, this could have just been 10-15% of a downtrend, not the entire amount which I drew on this arrow. But again, understand how the chart might flow, understand how the chart might trend, and it tells you a lot. And more than anything else, it eases that anxiety of holding. Shit, it's gone down. Shit, it's gone up. No, actually, it's following beautifully, Now, the cool thing about this was that look what happens afterwards. Like, it's going to an all-time high. It's gonna escape velocity. And here we had October. So between October and November, we hit the resistance. And then we sort of went down to like mid-November-ish, pushed again to resistance, got rejected at resistance again. And then in December, we took off. So that's about 3-ish months, which ties in with the June. But I think you mentioned June. It looks like it's going up, which I would agree with. Personally, I would agree with. Now, I posted this, and at the end of the day, I always know that, listen, maybe this chart, this entire whole chart took me to the resistance point, but it was wrong on the downtrend. I have to admit, sometimes it can be wrong. So I said, okay, cool. This looks like a perfect ascending triangle. You know why? You have 1 touch, 2 touch, 1 touch, 2 touch. This wasn't a touch, 2 touch. And what I was waiting for was a price to go back down, and then to push back up, go back down, push back up, and then it will take off. But it didn't do that. It cracked that ascending triangle. So in my mind, I said, okay, no worries. Then this is playing out. No need to like get all worried and all this kind of, this is playing out. So that's basically the major chart patterns that I was looking at when plotting out where we're going. And that's basically it. That's basically how I've been charting this move from 2021 all the way to here. And now what I think is playing out is this. I think we have 2 to 3 months of consolidation, which ties into TD sequential. And TD sequential is basically this one. So you get these numbers. These numbers are basically that this 7 is higher than this 4, and this 6 is higher than this 3, and this 5 is higher than this 2, and it's basically measuring momentum. And normally what happens is when you come and you reach a 9, you have exhaustion to the downside, and when you reach a 9 to the upside, you have exhaustion to the upside. This is normally worked though on normal candles, not Heikin-Ashi candles. It doesn't really work as solidly, but again, it tells you the trend. So here, what we're saying is that like from the bottom, Bitcoin has just gone up on the Heikin-Ashi with 2 months of downside. And those 2 months came on month 7 and month 8, you know, and now we're at 7. 7th month is amazing. Trust me, like this is a great candle. Like this, Bitcoin is looking super nice. However, we can have an 8 and a 9 slowdown, or we can have an 8 or a 9 reset, but that doesn't mean that the ultimate trend is up. So I think now is a great time to buy. I think that Bitcoin's move is front running 2012 and 2016. I can't remember how I had plotted these two fractals, but I had plotted them 1, 2, 3, 4, 5, 6, 7 months ago. And Bitcoin is above both in the last 7 months. I have this, I'm almost done. I have this fractal, which I had done a while ago. And basically I just plotted the 2015 fractal, which puts us at 100K in September. Sorry. Or 100K in October if we follow 2019. Or 100K in July if we follow 2012. Now that's crazy. If we're following 2012, that means we could have massive like euphoria in this market, which means that in no time we could have be at 500K and all of a sudden everyone's freaking out, you know. But I don't think, well, I don't know actually. Price discovery mode, there's nothing to it. There's no real chart pattern that can actually tell you what's going to happen with price discovery mode. That's one of the things I've noticed. However, then that's where I looked at pi cycle, that 46% I was telling you about. And what I noticed was 2009 to 2015, okay? We had the first pi cycle. It looks really small and it looks like shit, we're going to top out at this level or at this level. Price really goes up. Second time, 46%, price really goes up. Third time, 46%, price went up, fell back below, but then it went back up. The fourth time, we had 46%, price went up. And the fifth time is now, you know, so I wonder where we're going to go with the fifth time. And so what I did was I put the first 46%, and that's like 2010 or 11, you know, and that takes us to 800,000. The second one takes us to 470,000, 270,000, and 145,000. This should be 5, it was written wrongly. But basically what I'm thinking is we range anywhere between 145 and 800,000. So that's my trend for going up. There's a huge like discrepancy between 800,000 and 145,000. But to be honest, as I do more research on models that make predictions, I'm starting to lead more on the power law rather than stock to flow, and one reason is because I think power law is more orderly. Power law is more of a natural phenomena, you know, whilst something exponential can be dangerous. It can be dangerous, you know. There's Giovanni, who's the astrophysicist who sort of is pushing the power law, which is more or less being ignored. He says that sort of cancer moves at an exponential rate, you know. So, and exponential numbers tend to sort of can be dangerous. However, then I spoke to Samson Mao. I have this interview with Samson Mao at Madeira, and he says that he thinks we're going to 1 million, and he thinks we're going to, what did he say? Everything will be denominated in Bitcoin within the next 2 to 4 years, which basically means exponential growth. Why? Because if I want to buy this phone will cost 80,000 sats. So this phone will cost 50,000 sats by Apple. So what, or it will cost X amount in euro or X amount in USD. in any case, between 4 and 8 years, if so I'm from Malta, and in Malta we used to have the Maltese lira, and we went out of the Maltese lira into the euro, and basically that was in 2004. And between 2004 and 2008 we were allowed to use the Maltese lira, but after 2008 we weren't allowed to use the Maltese lira. So if they come out and they start saying, listen, Bitcoin's a thing, you know, like Apple are accepting it, Google are accepting it, blah blah blah, if they do come out and say this stuff, then what I'm thinking is you'll have a 4-year where this currency will be accepted, but then you'll have a time period where it won't be accepted, you know. And at that point, what does that mean for the price of Bitcoin? It could be exponential. So I don't really know, but those are my thoughts on the chart. So yeah.
Very nice. It's interesting how even if you're using fractals, which are basically just similar patterns of human emotion at a certain period of time on charts from 20, 30 years ago, people have the same kind of fear and greed, and trend lines and resistances kind of can be used on other charts, different assets, different categories, everything. And it all kind of aligns with on-chain stuff, and it aligns with the fundamental stuff, and they all kind of come together to give this confluence where, regardless of how you analyze the charts, you can sometimes come to a very similar conclusion, which I think really solidifies. It's almost like a self-fulfilling prophecy. If everyone sees something through their own lens but come to a similar conclusion, then it's more likely, I would say, to come to fruition. So interesting to see for sure. I think that the Pi cycle $145,000 prediction that you had on the chart would be probably the most realistic of those, I would say. Obviously, I wouldn't complain $800,000, but who knows? I'm just taking them one price target at a time. But as I said, really interesting to see that everything's kind of lining up, and we're seeing similar things in potentially a few months cool down after the halving event before the next leg higher, however high that may be. But yeah, I think this was a good chat. I think it's nice to get the perspective of both on-chain and chart pattern trading and investing. And yeah, we'll definitely have to come back in a couple of months and see how right we were, how wrong we are. I remember on the last discussion we did, I think I said my best case for Bitcoin prior to the halving was 75K, but realistically 60K at the point of halving. So I don't want to boast. I don't like to boast, but I was pretty spot on. So we'll see how
we both were spot on, which is good.
Which
is really good actually. It means that we both think similarly but differently. We form our decisions on different information, and we come to the same conclusion, which is really interesting because there are a million ways to trade an asset. Very cool.
Very cool. So thank you very much, Andrew. It was a pleasure having this discussion today. I hope lots of people found lots of value from the different perspectives, but as we said, that came to a very similar conclusion. And yeah, I hope you have a wonderful halving event that's happening in a day or two. I'm excited for it, even if I'm going to be asleep when it happens. But yeah, very bullish. I wore all green today in anticipation of price increases.
It's my birthday on Sunday, so
happy birthday for Sunday.
It's come very nicely, you know. Yeah, and from my end, I'll be posting stuff of chart. If like charting patterns is of interest, I tend to write on CCN about chart patterns and other educational content regarding mostly Bitcoin. I'd say 80 to 90% of just Bitcoin.
Great. So, yeah. Well, I'll include all your links below, so hopefully all the viewers of this video on our channel can go out and find some interesting perspectives and analysis from yourself, and I'll link everything. We'll sort it out. And as I said, we'll definitely have to do this again at some time in the future.
Cool, man. Cool.
Great. Well, thank you very much.
Next time, buddy.
And yeah, till next time.
Peace.